It says that Billy Bob wants to drive his competitor out of the market. If he continues as usual, he will make $10 this year for sure. For the next 3 years, he will also make $10 if the product has not become obsolete. So this year we know he's going to make $10, but next year it says after each year there's a 50% probability that the product will become obsolete. After those 4 years, the product will become obsolete for sure. And then so we're going to compare two cash flows. That's where he's not predatory pricing, where he's continuing as usual. But if he prices at his cost, or he predatory prices, this year he will make $0, but the competitor will go out of business, and then for the next 3 years he'll make $20 if the product hadn't become obsolete. So we know there's a 50% chance that each period it does become obsolete. And then it says for simplicity, assume that the interest rate is 0, so there will be no discounting back. And we're going to see if he's going to choose to predatory price or not. So first let's take a look at, well, if he doesn't predatory price, this is what the timeline looks like. He makes $10 for sure this period. There's a 50% chance that he makes $10 next period, so that's a value of $5. There's a 50% chance. There's a 50% chance. So this is kind of confusing, but you have to add another 50% chance because each year there's a 50% chance that the product becomes obsolete. So we do that for each year, and we add it up and get 10 plus 5 plus 2.5 plus 1.25 is equal to 18.75. And there was no discounting back, so that's the net present value if he continues as usual and doesn't predatory price. Well, if he predatory prices, he'll make $0 this year. There's a 50% chance he'll make 20 in year 1. And then again, there's a 25% chance, therefore, he'll make 20 in year 2, and a 0.125% chance, or a 12.5% chance rather, he'll make 20 in period 3. So we add all those up, 0 plus 10 plus 5 plus 2.5, and again, there's no discounting, so the net present value is 17.5 if he predatory prices. Therefore, we can conclude that predatory pricing is going to decrease profit. So he would rather not predatory price or continue as usual.